Hello, everybody. Welcome. We are so excited to have you with us today. Today, we have a special session of Next Economy Live, Strengthening Our Democracy, a smart way to create a positive rate of return. We will be turning it over to Richard Eidlin to introduce our panel today. But first, I want to quick thank our partners who help make this possible, the American Sustainable Business Council, Intentional Media, and Opportunity Collaboration. And with that, just another quick reminder that we do this every Wednesday, Thursday, and Friday, 1:30 to 2:30 p.m. Eastern. We invite you to join us. We have another session tomorrow on cybersecurity during COVID-19, especially with more folks at home. I hope you can join us for that. And with that, welcome. And I'm going to turn it over to SVC's Executive Director, Valerie Mohl, for a new series we're doing.
Thank you, Isaac, and thank you all so much for being with us again in this important time to come together as a community. As Isaac said, I'm the Executive Director of SVC, and I like to highlight an SVC hero before each one of our shows. And this is just a little time where we recognize a member or a company we funded or someone in our community that's doing something sort of extraordinary and beyond the call of duty, as it were, to address the COVID-19 crisis. And this morning, or this afternoon, depending on where you're at, I want to highlight our member, Natalie Molina-Nino. Many of you saw her speak at our annual conference last year. Natalie is very, very on fire around racial equity, and she wrote an article together with Michael Blake, who is a New York Assemblyman, on the racial bias that was maybe unintentional, but actually occurred with the payroll protection program, given that many Black and brown businesses and small businesses and community businesses, if they did not have a relationship with an existing bank, had a really tough time getting their application in and getting approved. And so she wrote the article, and then MSNBC picked it up, and you can find that on YouTube with her and Michael Blake. But what I love about Natalie is she doesn't just raise awareness, she takes action. So she then found some banks around the country, smaller kind of local community banks that still have capacity. So for those businesses that did get left out, were not able to get their application in because they didn't have this relationship in place with a bigger bank. She actually has a website where you can apply quickly, and they are holding some capacity. Isaac is putting that URL where you can reach Natalie directly and ask about this program, but she did tell me to let everyone know it's urgent. You need to kind of hurry up because, as you know, the SBA has run out of money for this particular tranche, and I believe they just approved some more. And but it's fairly urgent. And then next week, one of the webinars will feature Natalie, so you'll be able to interact with her and ask her questions, and I'll be interviewing her around this topic. But we just want to say a shout out to our hero today, Natalie Molina-Nino. And with that, I'm super excited for the program today. I know you're going to enjoy our guests. I'm going to give it to Richard, who will then introduce the rest of the guests. Thank you all.
Great, good. Thank you, Valerie. And thank you, Isaac and Social Venture Circle for inviting us to participate today. I am the National Policy Director of Business for America, and really happy to have some colleagues with me today to talk about the role that angel investors can play in strengthening our democracy. And by doing that, we think generate some more positive financial returns for the types of investments that they make and you make. So first, let me give a little context here, and then I'll introduce our panelists. Business for America is a not-for-profit working nationally on political reform initiatives. And our basic premise is that the business community has a critical and transformative role to play in strengthening our democracy. And by strengthening our democracy, we particularly look at political reforms, issues like ranked choice voting, open primaries, campaign finance transparency, fair districting, election security, vote by mail, and issues like that. And our assumption is that a more stable political system yields better economic returns. And that in these times when we're unfortunately seeing the fragility not only of our healthcare system, our economy, as well as our economy, we're also recognizing that our democracy is somewhat fragile, and that the norms by which we've assumed how things work are under question, and it's somewhat at risk. And so our work is to encourage business people across the country, both to work at the national as well as state and municipal level, to help change the rules by which political decisions get made and policy decisions. And our assumption is that if the political system is unstable and riven by partisanship and with a great deal of polarization and sort of controlled just by the two parties who often cater to the extremes on both sides, that it makes it really difficult to address any large scale issue, whether it's climate change or agriculture or sustainable agriculture or healthcare or immigration. And our thinking is that investors and other business people, by getting involved in the political reform or the democracy movement, can help to change the rules by which politics run and policies are made, and by extension, minimize your own risk when you make investments. So today's conversation is about changing the rules, how you as angel investors can play a constructive role, and asking ourselves, what can we do in this transformative time as socially responsible and conscious investors about writing the direction that America is heading. So we'll get into a number of those details, but let me quickly introduce our panelists this afternoon. First is Jim Davidson. Jim, as many of you know, has been an angel investor, social impact investor for 10 plus years. Jim lives in Denver, Colorado. Jim is the chair of the Social Venture Circle and also does a good bit of work in Latin America on affordable housing and sustainable ag. So we'll hear from Jim in a moment. Jim also lives about 2 miles from me here in Denver, so that's pretty exciting also. And then following Jim will be Sarah Bonk, who goes by her last name. So if you have questions, you can address them to Bonk. And Bonk is the founder of Business for America, which started a few years ago. And prior to that, worked for Apple and a number of other multinationals for quite a few years. And she was with Apple in Cupertino in California for about 14, 15 years. And then finally, we'll have Sid Amster. Sid is a colleague of ours in Philadelphia and has also been a social impact investor for many years. We'll be talking about the criteria, the concerns that angel investors like him have when they make decisions, when they make investment decisions. So one other logistical item here is if you have a question, you'll see there's a Q&A button to the right at the bottom of your screen, to the right of share screen. So just type your question in, and then I will read those questions, and we're going to leave about hopefully 25 minutes or 30 minutes at the end of the call for the conversation. And we really want to know what you're thinking. And we also want to try to, provide you an opportunity to get involved in this political reform democracy movement. So Jim, let me turn it over to you, and the mic's all yours.
Great. Hey, thanks, Richard. I'm happy to share some thoughts with my SVC friends here. As many of you know, and Richard mentioned, I've been an angel investor for years, and I've always been enthusiastic about business solutions to big problems, and also small companies that can be models of those that operate in the next economy, an economy that's sustainable, resilient, inclusive, prosperous, and in service to all. Some of you also know that the last few years I've gone back to school to kind of better understand the sort of structure of our economic system and how it affects our impact investing landscape. And one of the things that I really learned right off the bat was the importance of democracy. Empirically, good democracies outperform poor democracies. And what really makes a good democracy is inclusiveness. And you'll hear a lot from Bonk about how we can improve that. But essentially, the more that the voting population is healthy, educated, secure, has reasons to trust its public institutions, and is engaged in a productive dialogue around universal themes, the more democracy approaches what's called the median voter preference, as Richard mentioned, getting away from the extremes. And what's really encouraging is the median voter is pretty smart. The median voter leads, the median voter preferences, we have a really inclusive democracy, leads to policy that's good for capitalism and good for our investment climate. Specifically, it leads to economically efficient redistribution in the form of healthcare and education, things that people know are good public investments. It also leads to productive regulations that support higher competition and innovation. So for all these reasons, inclusive democracy is good democracy leads to good policy, and good policy improves our investment climate. So the thing that Richard and I talked about that we wanted to share with folks is, if all that's true, why don't we have a very inclusive democracy right now? And it turns out that I would suggest that the sort of voter disenfranchisement efforts that we've seen in the last few years, actually the last 10, 20 years, are sort of an artifact of the overall economic project that's been underway since World War II. And I think it's important for us to understand these sort of the contingent nature of what Richard mentioned, these sort of assumptions that underlie our democracy and our market-oriented system, and where they came from. Specifically, after World War II, the Western world was very comfortable with government involvement in the economy, but there was a small group of intellectuals who felt that that was going to lead to a big problem. Specifically, and this is best articulated by Friedrich Hayek's work, The Road to Serfdom, which I recommend you guys. It's a good piece to read. 1944. Essentially, too much public involvement in the economy, so argued, would lead to frustration, and that would welcome authoritarians. Okay, which is what Hayek argued was what happened in Nazi Germany and Stalinist Russia. And so what happened is, over those 40s and 50s, this sort of intellectual thread incubated. It didn't have a practical effect, okay, on our policy until the late 60s, when all of the confluence of the Vietnam War, and especially the civil rights movement, and in addition, the Arab oil embargo and the stagflation of slowing Western economic growth, all these things came together to take this intellectual rationale about a limited government to avoid authoritarianism, and it came forth to us through the powerful election of Margaret Thatcher and Ronald Reagan. If you remember, Ronald Reagan's government is the problem, not the solution. Margaret Thatcher's Tina, there is no alternative. What happened with that confluence of events is it really shifted our political landscape. And most importantly, it shifted our assumption of the rightful role of public collective action in our activities in economically efficient capitalist regulation and redistribution. And we're living with that now. How it relates to democracy is part of this whole intellectual current included what's called the incubation of what's called public choice theory. This specifically says that government is not in your best interest, it's in its own best interest. And more importantly, individuals will foolishly vote for that. Ergo, it makes sense to limit voting on a wide scale. And that is that is the intellectual rationalization, public choice theory, for the disenfranchisement of voters to avoid voting too much government that will lead to tyranny. That's why we're here. That's why our current economic model is structured and our democracy is functioning the way it is. But you're going to hear from Sarah Bonk shortly, actually right now, about how we can change that recipe and use smart examples to expand voting, to start changing this normative order that is holding capitalism and adding risk to our investments back.
Great, good.
So
Jim, great, Jim, thank you. So we're going to come back to that, Jim's sort of overarching his historic view, but let's hear a little bit from Bonk about some of the work that the political reform movement's focused on, and particularly why there's a role for the business community to play in sort of reversing some of the tendencies that Jim just described. So, Bonk.
All right. Thank you so much, Richard and Jim, for kicking that off. And thanks to Social Venture Circle for hosting this conversation. I think this is going to be a real fun one. As Richard alluded to, I am not from the investment world, but I am from the corporate world, so I know a thing or two about business. And I actually got involved in the democracy movement, or whatever you want to call it, while I was still at Apple. And I was doing this in my spare time and focused on the grassroots side, talking about why well-functioning democracy is so important to our entire society, but noticed that the business community was really missing and nobody was adequately making the business and economic arguments for why well-functioning democracy is so important. As Jim alluded to, the problems we're seeing in our system are not new. This has been a long slide, and as we all know, democracy requires constant tending. It is, we're never done with the act of creating a well-functioning democracy. So as we shaped Business for America, this is the premise, that the interests of the public and the interest of business are aligned on having a well-functioning democracy or republic or whatever you want to call it. The problem has been, how do we convince business that it's in their interest? And I think this is a challenge for everybody because it's easier to see how substantive issues affect us. You know, whether it is your taxes or potholes or regulations that are impacting your business, those things are a lot more tangible. And whereas with politics, we think is this abstract thing that's happening somewhere else. We see people arguing on TV, we see the toxicity, we see the polarization, and a lot of us have checked out of that process, and understandably so. And when we talk to businesses, they understand, and business groups are thinking about the regulations that are going to affect them, the bills that are coming down the pike that are going to affect their employees, affect their business in obvious ways, tangible ways. How do we talk about the process by which those decisions are being made, the flaws in that process that are leading to bad outcomes? And again, those are bad outcomes for business as well as everybody in our country. So knowing that these arguments are not so direct, we kind of have it divided into two main areas. And one is corporate social responsibility. For everybody here who's into social impact investing, they get that there's been this rising tide of corporate social responsibility and an expectation that businesses are no longer just expected to make a profit. Shareholder capitalism is on the descent, and stakeholder capitalism is on the rise. We saw that with Business Roundtable's announcement last year that officially everybody was getting behind this idea that business is also intended to do good in society and not just generate profit. So when we talk to those purpose-driven companies, they get it. They get that the health of democracy is important to their employees, their customers, their communities that they operate in. And so that means looking into how our elections function, making sure that those elections are accessible to their employees in their communities, and that participation is as great as it can be. But also at the same time, we can get past the altruistic motives and look at the self-interest. I mean, certainly having employees who are civically engaged means that they are more engaged employees. We can look at many dimensions of self-interest, but part of it is that a dysfunction in our government is hindering our economy. For the last several years, the Harvard Business School's report on competitiveness has had political dysfunction as the #1 factor hindering American competitiveness. And we can look at statistics across the board where American democracy is on the decline and the economy is not showing the signs of robustness that it once did. Certainly, at least a couple months ago, we might have pointed to the Dow and said, things are going great. But when you really looked at a broader variety of statistics, the picture is not as great. And you can see where we're declining on so many factors, from public health to dynamism in the economy. So a lot of this feels very abstract when you think about politics, when you think about, people sitting in a hill in a room making decisions. So it's our job to make that tangible and talk about how we fix the problem. In particular, I want to start with polarization. I hear this all the time in the press, or I've gone to business conferences and people are talking about polarization and gridlock and we're not getting things done. And these are all solvable problems. And I hope the folks come away today with the understanding of, it feels like politics is ugly and nasty, and it's always been that way and it's always going to be that way. I want you to come away with the feeling of these are solvable problems, just like any business problem. And we actually already have the solution. We just need to generate the political will, and the business community is part of that, to get those solutions into place. So when we talk about polarization, and this will be the last note that I keep you with, the rules, the incentives in our election system are what lead to this bad behavior that we see. We're literally shaping political parties that are incentivized to go for the fringes. And like Jim was talking about, most of us actually agree, most Americans agree on most things. There's all kinds of progress that we could be making on things we agree on this shared interests, but we're not, because our political system is pushing our two major parties to the extremes and not letting in outside voices and not encouraging the parties to fight over the middle. So I'll just leave it there because I know my time is short, but want to leave folks with that sense of hope and an understanding that business has an evolving mandate for corporate civic responsibility, another dimension to corporate social responsibility, and adding that civic dimension is going to reap benefits for us as investors, as business owners, as shareholders, as employees. It really is a rising tide lifts all boats kind of situation, and I think everybody should get all in on this kind of investment. Richard?
Great, good, Bonk, thank you. Yeah, and let me just make a sort of a fine point comment on what Bonk just noted, which is a number of the reforms that have been proposed and are making progress across the country, be it ranked choice voting, where in order to get elected, you need an actual majority. You can't be elected with a plurality, which is the current case in a lot of municipalities and a lot of states. So those ideas like ranked choice voting or open primaries, which would allow independents to participate, or fair districting, so that you have some rational mapping approach to dividing up your congressional district. These are all ideas that will reshape how political decisions and how policy decisions get made. And we'll mention a bit more in a few moments about how Business for America is working in a number of states across the country and in making this business case that Bonk just articulated. So let me now turn to our friend Sid Amster in Philadelphia, and Sid is going to give us sort of some sense of what the criteria are and the conditions by which angel investors traditionally have made investments, and maybe how some of their thinking is now going to shift to factoring in the stability of our democracy when they make these investment choices. So Sid?
Thank you, Richard, and thank you, Jim and Bonk, for setting the table for me. As many of you know in SVC, I come from an environmental background, and when I started, I lived in a world that was somewhat polarized. It was 1973, we formed an environmental consulting firm, and it was a fascinating time because the polarization was over different issues, but no one really knew what we talked about, and I didn't even know I was involved in social impact by getting involved in trying to design better cities and better environments in business. We fast forward, and what do we mean by, and what do we invest as social venture people? Well, we cover a broad range. As I pointed out, my specialty area is environmental remediation, energy efficiency, but I also have been heavily involved in educational software. I look upon that as one of the areas that is for the future. And I'm a very practical person, so I'll say that I do that because I have a grandson and I want him to have a better world to live in. We move forward, we say, well, how do we differentiate ourselves from standard types of investors? And one of the key areas is that, we invest in the communities. We want to involve ourselves with the communities. We've done that for many years. Secondly, we want to deal with the underserved people in the community. Examples, investments in companies that sponsor ex-felons in their jobs, broad-based spectrum people involved in business. We have a company that we invest in that area. We also want to encourage greater diversity in the entrepreneurs. We have that stream that happened way back when it was dominated by one group. But we find that by having greater diversity, we get better opinions and we get better results. And finally, right now, we start looking at how we can ensure better involvement in the communities in areas that affect them directly. And it goes back to what Bonk and Jim has said. And the classic example of that is, can we have fair redistricting? Can we have an ability to have people who live in an area be represented by the people themselves? And that's very important, at least from my perspective, in terms of what I mean when I say that I'm a social impact investor. By being so, we also say to ourselves, what are the companies that we work with, what are they supposed to do, and how are they supposed to operate? And the key things to that is we want to look at the people who run these companies or in these companies, representing themselves, that they handle themselves with issues that revolve around fairness, fair wages. We want to have fair benefits for people. We make that part of the policy in my investments. We also want to have the opportunity for everybody to have an advancement opportunity in the company. If I'm going to invest in the company, I want to see it prosper. And at the same time, I want to see the individuals who've been involved in it also prosper. And finally, I want to promote engagement. And I want to promote engagement not only in the company, but also in being an advocate within their community. And that again goes back to the point of how do we have fair representation? How do we district themselves so that we have fairness and we reduce the amount of polarization that's found throughout the political system? So that begs the question. I have about a minute or two to go, so I'll ask the question myself. Where's the risk? Well, 20 years ago, people viewed anybody who involved, and I know Jin could say the same thing, made an investment that has social impact of saying to themselves, well, I'm doing it because I'm going to take a lower return. But what we found over the last 20 years, society has responded, and particularly the generations that follow me want to have social impact. They want to have some involvement in the companies within the political process and also within the economic system. And they go hand in hand. So in that course, if you look at the statistics today, if I have a portfolio of social impact companies, it probably performs just as well or even better than a standard form of portfolio. And the reason being is for what we've been talking about: fairness, the ability to draw in inclusiveness of having a broader range of people. What do I look at in the future? Well, if we continue to reinforce the area of reducing the polarization, we're going to have to do a better job as we come out of this current crisis we have. And the better job means that we have to engage not only the entrepreneurs, not only ourselves, but also the employees of the companies that develop and advance, so they recognize the fact that polarization is not in their best interest. In fact, what's really in their best interest is the fact that they have the ability to be part of change. And that goes full circle back to when we started investing. At least I did 20 years ago. I wanted to produce change. So that's my story from a practical investor. And thank you for your time.
Great, good. Sid, thank you. And we'll come back to a number of those points. And thank those of you who are sending in questions. I'm going to get to both of those that I have in a moment. But I wanted to pick up on a theme that Sid just raised, which is about employee engagement. And we've been thinking about this concept about civic health. So, you know, we think as a society a lot about we need a stable infrastructure, we need high-speed internet, we need clean water, we need a reliable transportation system, we need an educational system that our kids will benefit from. So if you extend that thought about infrastructure, you could also consider that the stability, the health of our civic life and our political institutions is really essential to the overall workability and solvency of our society. So one of the questions that people in the democracy movement and Business for America included have been thinking about is to make sure that the COVID health crisis, while it's producing many economic casualties, unfortunately, and many public health and personal casualties. We don't want democracy to become a casualty of the healthcare crisis and the COVID crisis as well. So I wanted to just pivot for a moment and have Bonk talk about a project we're working on with Patagonia and Levi's and PayPal called Time to Vote that a number of you may know about, but it's a direct strategic response to Sid's question about how do you get employees more involved in their democracy. So Bonk, maybe you could just describe how Time to Vote works and maybe say a few words about the importance of giving people the option to vote by mail as well as a strategy to shore up our democracy.
Sure, so I'm happy to talk about that. So Time to Vote is a business-led initiative, nonpartisan, nationwide, and of course, you know, when you've got some of the big dogs in the room like Patagonia, it generated a lot of energy in 2018. They had over 400 companies sign up to say we're going to ensure our employees have time to vote. Now, in a lot of states, it's mandatory to allow your employees time to vote, but there's something about going beyond what is legally mandated to say we care about our employees participating in the civic process and having a voice in our government. And so we not only want to make sure that they have time off and as they should, but that we're also going to encourage them. We're going to make sure that they know what deadlines are coming up for registration or requesting their mail-in ballot. And so they were wildly successful in 2018 and off and running for 2020 and starting to put a number of companies together, ensuring that this was, again, national in scope and also reaching out to companies that are not perceived as being the vanguard of the corporate social responsibility movement. Walmart participated, for example. This year they got JP Morgan Chase. So this isn't just about some of the more progressive leaning companies wanting their more progressive leaning workforce to speak out. It really was genuinely about the importance of everybody, every voter participating. Now, in light of the COVID-19 crisis and companies needing to focus on a different set of issues, that is temporarily not their primary focus at this time, as you might imagine. And a lot of us have been trying to figure out what we can do. What is our job now in this changing world? For Business for America, that has meant getting involved with the vote at home movement or vote by mail, however you want to call it. And the good news is there's already 5 states that are entirely vote by mail, do it successfully, securely, auditable. And it's a proof that you can have elections that are both accessible and secure. We don't have to trade one for the other, right? So expanding vote by mail, it just makes so much sense. Some states are not going to be able to switch 100%, and that's okay. What we want to do is offer it to as many voters as we can. And then where voting in person remains necessary, ensure that there's extended voting, a longer time to get to the polls and do so safely, that everybody has PPE and all precautions are taken. We really don't know where this coronavirus spread is going to be come November. So we need to take action now to, as we like to avert risk when possible, take action now to be sure we're prepared for what may be worst case scenario. It's not unusual in the past for pandemics to come in waves, and winter certainly may be the cause of another one. So when it comes to vote by mail, we're currently the only ones really organizing the business community and business groups to speak out on this issue and from a business-only perspective. At bfa.us, you'll find a link to our letter to Congress and to the states asking them very simply, not a lot of requirements and not a lot of details, because each state has to figure out what is going to work for them and what's going to be feasible, that they offer vote by mail to as many voters as possible and talk about those changes that we can make it for in-person polling to minimize it and make it as safe as possible. So that's what's going on in the business community, and aligning the interests again where grassroots, business, nonprofits around the country and across the political spectrum are figuring out how we can make a compelling argument and get this done quickly.
Good. Thank you, Bonk. And Jim, let me just quickly go back to you. You were talking about voter suppression and disenfranchisement strategies. So from your perspective as an investor, what's the business case for encouraging more people to actually participate? What's the benefit that accrues?
Well, again, the median voter is a pretty wise voter. So the more inclusivity, as Bonk mentioned, the closer we get to the median voter's preferences, and the median voter's preferences provides for policy that's actually good for business and good for our investments, like what I call economically efficient redistribution in the form of universal, perfect example is universal health care. That helps for both keeping our population healthy, but it also levels the playing field between very large corporations and small innovative corporations that we in the social venture impact investing community want to support. And it also supports one of the key aspects of what we call the next economy, inclusiveness. In other words, the smallest startup company needs to be able to hire the most passionate and talented folks, regardless of their health conditions, right? And this is a key aspect of universal policy that the median voter will vote for when given the choice. I mean, the current extremes kind of paint these pictures in ideological extremes for reasons that have to do with sort of what's called elite advantage and elite preference positions. But once you kind of pull that back, you do get closer to the to policies that are efficient. And universal healthcare is probably the best example. And you see this in the COVID crisis.
Mm-hmm. Okay.
In the United States, and this is all contingent, it can all be fixed. You have, articles in the Wall Street Journal that talk about hospitals under strain for lack of income from elective surgeries that have been stopped. So we have a huge demand for healthcare, and yet because the for-profit system has been so optimized to support and live off of high-value elective surgeries, the hospitals are weak. By comparison, in the UK, the hospitals and all the employees are salaried, and they're not spending time talking about this. They're spending about a half as much as we are. They're getting the same results, and they're not talking about this today, which is one of the reasons why you see the UK in a much more cohesive response to this than the United States. So these are all decisions, and as Sarah mentioned, as Bonk mentions, the more we get inclusivity, the more we'll get closer to those types of economically efficient, competition supporting, innovation supporting policies.
Mm-hmm.
Could I tack on to that really quickly?
Mm-hmm.
Something we hear, a misconception that we hear often is that if more people are voting, there's greater participation and greater access, that they will necessarily want to vote in a populist or somebody who's going to give them a bunch of freebies, right? And when you really think about the average voter, the median voter that Jim was alluding to, the country's, people are a lot more savvy than that nowadays. They recognize the value of business, and they recognize where jobs are coming from, and really trust the institution of business more than the institutions of government. And there are, I think, very few people that are interested in definitely reducing the strength of the business community to deliver jobs and just deliver value, deliver great products and deliver great services, right? So I think there's some unfounded fears there. And as Jim was alluding to, when more people participate and they are excited to know what is happening with their government, they're educated, they're informed, and engaging at the poll booth or filling out a ballot at home, that we're going to get better results.
Make a quick comment on that. It's almost fundamental that if you give the people the opportunity to vote, they're going to vote in a non-cynical manner. They're going to vote for their interests. And in a democracy, they're going to vote for a system that allows them to participate, and at the same time is going to allow them to have representation that represents their best interests. So we move away from the fracture of being polarized, and you move towards a system where people are voting, and they're going to vote for an interest that'll maintain some of the systems, but also, if you look at some of the statistics, a significant portion of the population wants to go to a single user system of healthcare. Ironically, we almost have that now. We have Medicare, and the largest insurer is the government, but if you poll the people, they wouldn't recognize that because we see the edges.
But, let me read a question here from Sanford Lewis. And Sanford, good to see your name. I know we haven't spoken in many years, but hope you're well. And this might be a question for Jim or Sid. And Sanford says, it should be noted that the Securities and Exchange Commission is currently considering rolling back shareholder democracy provisions during the pandemic, undercutting the key right of shareholders to file proposals, especially cutting off smaller shareholders their access to the process. So Sanford wonders any recommendations on how we can use this moment to reverse that trend by the Securities and Exchange Commission.
You go first, Jim, and I have a comment afterwards.
Well, this is a good question. This is a tough time because a lot of what we've been discussing, what Bonk was talking about, is essentially this sort of artifact of public choice theory that disenfranchises voters. There's a great book on this called Democracy in Chains by Nancy McLean. I'll type it into the chat. It describes all of this. And one of the key things is the ideology that underlies all of this. So in this COVID crisis, why would there, and I wasn't aware of this, but why would the SEC be doing this? It's because the SEC works for the executive branch, and I think that, when Bonk talks about civics and Richard talks about civics as a value, I think a lot of Americans, they really don't sort of 2016 woke them up that policy matters and that the executive branch is responsible for executing the wishes, intentionally or unintentionally, but that have been outlined by the legislature. It's a basic civics lesson. So what can be done? Right now, I think one of the things that Richard points out all the time, which I really agree with, is policymakers, you may think they're cynical or otherwise, may have been got to their point, ill-gotten or otherwise. They listen to business. Okay. One of the leverage points in our normative, ideologically driven, normative, market-oriented approach is that policymakers listen to business. So when we get our small businesses to call their policymakers, and when we get our large businesses to call our policymakers and advocate for economically efficient policies and voter inclusiveness, is a strong leverage point. This is why SVC is looking to partner even more directly with ASBC and hopefully BFA in the future. Policy matters, and voices of individuals. Think about it. We just passed another $500 billion for small businesses. That's a big leverage point. The world wants to help small businesses. We have to encourage our small businesses to speak out and give them a very specific and a very well-tuned narrative. Okay, make it clear that we're all saying the same thing. Good democracy is inclusive democracy. That's both at the shareholder governance level and at the voter level. We need to refine our message.
I agree with you, Jim. The SEC one, as you pointed out, perhaps responds to the executive branch, but the question overall is, in a pandemic situation we have now, why are they even bringing up these topics? Mm-hmm. And I don't want to be one who's going to deal with conspiracy theories, but the reality is certain individuals who want to leverage better their own position are going to do that by taking the opportunity to do it. And our responsibility is to push back in those situations and make sure that this leverage is not applied.
Yeah.
I try to spend every day 20 letters to my congressman and try to get 20 friends to do that. And probably all of you are aware of that. But the SEC is a classic example that some pushback by business people is going to be effective. Mm-hmm. It doesn't take a lot in this particular case. We have to keep our eyes open in the pandemic for people and groups that are going to try to massage the economy to their benefit.
Yeah, I think that's an excellent point, Sid. And if as I'm sure many of you have been reading around the world, this COVID crisis has created a great opportunity and opening for authoritarian perspectives. So we see that in Hungary, we see that a bit in other advanced industrial economies. So we really do need to be mindful of that. And I wanted to sort of play off of that idea and answer Matthew Colbert's question. And Matthew says, since the White House seems clearly against this, I think Matthew's referring to vote by mail. And since the only way this gets passed is being attached to a larger bill, how is the outreach going to Republicans to get this passed so that it's not just seen as a Democratic bill, but as a capital D Democrat bill, but as a small d Democratic bill. So Matthew, as you probably know, the decisions about how elections are run are organized by the states. So the federal government has very little to do with how elections are conducted in Colorado or Connecticut or California or Kentucky. That's really a state choice. The issue with the federal legislation that Amy Klobuchar and Senator Wyden in particular have been pursuing about vote by mail refers to whether the federal government will provide funding to support the acquisition of new equipment, hardware, scanners, and other upgrades. But what we are finding, which is really critical, is that individual secretaries of states, governors, and state legislatures can make these decisions themselves. Whether President Trump thinks this is a good idea or not is completely irrelevant, because we just saw, for instance, a week ago in New Hampshire, Governor Sununu, who's a Republican, looking at the healthcare crisis and the COVID crisis in his own state, decided to issue an executive order that whoever wants to can vote by mail in New Hampshire. So this really is not an issue, as Bonk noted earlier, that will benefit Democrats or Republicans. The studies that are out there suggest that either party can benefit, and it really depends on who does a better job of getting the vote out. Bonk, do you want to comment on that?
Yeah, just real quick. That was a great, covering the first part of it, and just would dig a little deeper. Federalism is a tricky thing, and sometimes, it has good outcomes and sometimes tricky ones. And the first coronavirus relief bill did include $400 million for the state's election systems. It didn't have any requirements built around it, and it wasn't enough for every state to do everything that really needs to be done to offer vote by mail across the board, but it gets us part of the way down the road. So there's additional advocacy going on. And of course, some of these bills, like the one he alluded to from Klobuchar and Wyden, that would put some requirements around the use of that money. The good news is, as you mentioned, New Hampshire, a lot of states are working on this and they want to do the right thing. They recognize the public health issue and they don't want to find themselves in the situation Wisconsin did recently, where they had not adequately scaled up their infrastructure. It ended up being a game of political football, and the losers were the voting public, many of whom didn't receive their mail-in ballots in time, or who had to go to a polling place that had been reduced or they couldn't adequately social distance. And in fact, they have tied some cases of COVID-19 to election day, unfortunately. So again, doing the right thing here is going to happen on a state-by-state basis. A lot of states are already off and running, trying to figure out how they can put this together. And we're going to need to leverage a little pressure, and again, using the business community to make it more likely to get things done here. Figure out where we can really have some influence to make sure lawmakers and executives are getting things set up. The election officials, for the most part, are already on board and want to do it.
Good. There are other questions that have come in, so let me ask this next one to Sid. This is from David Corton. Hello, David. Hope you're well. And David asks, how do you think about adequate or appropriate fair profit combined with other benefits in contrast to maximum profit, which most likely involves externalizing social and environmental costs? So that the maximum profit would externalize the social and environmental costs. And David wonders, in the context of this discussion, is it time to be more explicit that we're not talking about maximizing profit? So, maybe this is a question about the future of our economy, the future of our democracy. Is there a way to reorient our priorities so we're not just focused about maximizing profit?
That's a tough question. I mean, what we are missing is the fact that we have been moving towards corporate structures that don't exclusively work, I call it the Friedman philosophy of maximizing profits. Good examples, we mentioned Patagonia. We have lots of corporations out there today that view the shareholder of the stock as one of the stakeholders, and they want to have, for example, better benefits and pay for their employees. We also see them looking at other areas to improve their business that is more socially advantageous. Trade-offs, are always there, but let's be more explicit about it. We have a choice between wind power and coal. One maximizes profit, the other one maximizes social benefit by any imagination. And what's happened through entrepreneurs over the years is the cost of wind power is now probably less than coal in the United States. So the economic system just plays out, the marketplace plays out, and you have a winner in the case of a business type that has more benefits for shareholders, more stakeholders. I don't know if I answered the question, but that's my perception of it.
Okay.
Yeah, I
Good.
think at its root, it's a question about long-termism versus short-termism, right? And we have to think about that both economically and in terms of our political system. You know, the gains that we can get in the short run with sort of a slash and burn mentality may be greater than we can, you know, again, over the short run, than we can thinking long-term about how we create sustainable businesses or sustainable political systems. And I think it's not an easy question. You know, like all of these, there's many, many levers.
Right.
We're going to have to figure out where we can leverage our enthusiasm and political will to make long-termism rule the day.
And I think this, Sid, go ahead, sorry.
Well, Bonk, you're really right on in it, because my degree is in forestry. If you view upon forestry when I graduated, the best thing you can do to optimize revenue is to clear cut an entire province or entire state. What's evolved over a period of time through the marketplace has been there is no need for all this paper. And the end result is foresters now look upon sustainability and not the, you know, the one that talks about we'll plant a tree that'll be ready in 150 years, but one about utilizing land in a different way and recognizing that other stakeholders have value within it in terms of, for example, recreation. So we have to shift our values according to, and shift what we do to meet those current demands.
Right, and this is clearly a moment in our history where, you know, people with resources and time and ability can influence the outcome. And so the next question, Jim, is for you from Chris Bentley. Chris, hope you're well. And it sort of builds on David's previous question. So Chris says, you know, what do you recommend as best practices for early stage investors to engage policymakers to understand the types of policy trends that can lead to opportunities for smart private sector solutions? And how can organizations like Good Company Ventures and Social Venture Circle help facilitate those engagements? So it's essentially a question about, well, how can early stage investors get involved in political reform? I think, you know, that's the nature of the question here.
Well, this is somewhat related to the previous question. I mean, the first thing to talk with policymakers is to kind of have a broad enough perspective about how we got to where we are, and understanding that so much of these assumptions around profit first and whatnot, all that's contingent. All that is a construct. In fact, the irony of our current economic system, which seeks to eliminate interference of government, is it was government that forced the system on an unwilling population. That's going back a few hundred years, okay? But the point is that when you talk with policymakers, it's clear to say that, you know, these things are contingent. None sort of what Richard said earlier, none of these assumptions about government is always inefficient. That's a normative statement that actually turns out to not be true. And to have our early stage investments in our early stage companies, in a sense, lead by example about new forms of governance and new forms of sustainability. There's a great book called Throwing Rocks at the Google Bus. I gave copies to most of my fellow board members at Social Venture Circle here. And it talks a lot about how to conceptualize different forms of ownership. Most importantly, and Sid talks a lot about this, community-based investment and recirculation of money. In a sense, I think the best way for us to talk to our policymakers is to step back and question our own assumptions and our own sort of normative view of the market-oriented system, and look towards some of this emerging work that is questioning some of those basic assumptions, and then we can have a proper dialogue. And one last great recommendation I'd give is Pope Francis's encyclical Laudato Si. And faith-based organizations have been critical in shifting the narrative and having an effect on policy. And I think if you haven't read this and you sit down and read it, you'll find a really thoughtful piece around questioning the basic norms and assumptions of capitalism. And when we do that, we can have effective visionary discussions with our policymakers so that they can feel that they can move outside of the box and provide a more sustainable, what we call the next economy. Sustainable, resilient, and service to people.
Right. And let me just quickly add to that. I know from my many years of bringing businesses to Capitol Hill, sometimes being there with Jim, but also working in city councils and state governments, that the people who staff those political offices, they need to hear from people like us, because they know what they know, and there's a lot that they're not familiar with. Policymakers also understand who their constituents are and are eager to learn. So there's always an opening to inform policymakers. And having said that, I want to go to Paul Horowitz's question. And Paul says, you've each identified polarization as the focal driver for moving forward toward a more engaged business populace in the democratic process. So Paul wants to know our thoughts on the pushback that's likely to come from entrenched or incumbent industries like the pharmaceutical or insurance industry or big ag or the chemical industries, as they seek to protect their influence and the benefits that accrue to them. So I think implicit in Paul's question is that some people are benefiting from disenfranchisement, and some people are benefiting from polarization. Bonk, do you have an opinion about that?
Do I have an opinion about that? Yes, well, I think it's a very well-placed question. And I actually would like to use a really concrete example. We mentioned earlier redistricting and how districts can be drawn to ensure one party has an advantage over the other. So you can squish all your opponents into a district that they win easily, and then make sure you're able to have a better shot at winning a whole bunch more districts, right? This happens across the country and both parties do it. Whoever's in power, they often take advantage of that opportunity. In Michigan, the people put together a ballot initiative. They got all the signatures. They got it into the election for 2018 to say, we want nonpartisan redistricting. And one of the greatest opponents of that was the Michigan Chamber of Commerce. And was like, I was stunned even having done this for all these years, that a business group fighting for business interests felt that one political party, whoever has the majority in the legislature, should have the right to draw the districts to continue their own hegemony, frankly. So the way we think we get around that is by making the compelling case that that's not in the interest of the business world at large. There certainly are companies that are getting an advantage because of regulatory capture, cronyism, the lack of transparency in political donations, and who knew, they may even prefer gerrymandering in some cases. Mm-hmm. So by making the counter argument that having a more dynamic economy depends on having a more dynamic democracy and broader participation and broader access to the franchise, that's going to be good for all of us, and that at least most businesses can see that and are on board with it.
Right. So we are almost out of time here, and we needed, Isaac wanted us to stop right at the half hour. So I want to get every speaker's comments on this final question. And I'm sorry to those of you who submitted questions that we haven't had time to get to, but this question is from Patricia Forcina. And Patricia says, President Trump was elected because he presented himself as the average man's candidate. He was addressing people who felt disenfranchised by previous administrations that were represented as elitists. So how do you get those people on board when they're worried about feeding their families, paying bills, and saving for college? So, very important question as we're heading into the election. And Jim, a thought on how do we get those folks on board?
You know, the way you break down ideologies with good new ideas, the progressive movement walked away from universal issues a long time ago and has been really focused on a lot of identity-based politics. And we need to get back to universal themes and message that. We just have to do the work because, you know, we could offer policy that makes sense, but we have to, you know, provide space for that.
Okay, Sid, thought?
Well, remember 30 years ago, the NRA wanted gun control. We have to get them back in that position. I'm being a bit facetious, but it is really true. And avoiding the extremes means participation of people, recognizing that by having an active plurality of people, we're going to move away from the extremes.
Okay, and Bonk, your thought?
Sure. Well, what we saw in 2016 and what we continue to see with polarization and partisanship and populism is not a new thing, right? 2016 was really a symptom of a much greater issue. The Economist even downgraded the United States of America from a full democracy to a flawed democracy. And the way we address those issues and these people who feel disenfranchised is to re-enfranchise them. And that means elections that are secure and accessible, as well as competitive, like genuinely introducing competition into the election process and transparency so that we can build that trust up and get better results from our lawmakers because we're holding them accountable.
Mm-hmm. Good. And Isaac is back with us, but let me just say the following, that, you know, if you found this conversation interesting and are inclined to continue, Business for America looks forward to partnering with Social Venture Circle and all of you. There's a lot of work to be done in the coming months. And, you know, it's not just hyperbole to say that our democracy is at risk. And so it's really important that business people participate. So we welcome engaging with you all. Isaac, thank you.
I just want to say thank you again. And yes, we do want to obviously respect everybody's time, but my daughter also wakes up at 2:30, so you're all going to get a gong soon anyway. But I want to thank everybody for joining us today for another wonderful episode of Next Economy Live. I'm thankful to all of our presenters for taking the time and all of you that are participating. Do encourage you to keep tuning in 1:30 p.m. Eastern every Wednesday, Thursday, and Friday. And you will receive a follow-up email with a recording and information from BFA. And so encourage you to stay connected with all of us. All right, take care and have a great one.
Good. Thank you, everyone.